Have you ever wondered what unlisted shares are and how they work? Well, you're about to find out. Unlisted shares, as the name suggests, are shares of a company that are not listed on any stock exchange. Instead, these shares are traded over the counter, which is a fancy way of saying they are bought and sold directly between individuals or through a broker who specializes in unlisted securities. There are several types of unlisted shares, including pre-IPO shares, delisted shares, shares issued in private placements, ESOP shares, and shares held by group shareholders of private companies. Now you might be wondering, why would anyone want to invest in unlisted shares? Well, there are several advantages. For starters, investing in unlisted shares provides the opportunity to invest in a company at an early stage, before it becomes publicly traded. There's also no worry about allotment security once the company announces an IPO. Plus, there's the potential for better returns, and it can help diversify your investment portfolio. But it's not all rosy. Investing in unlisted shares also comes with its fair share of disadvantages. For one, it's a risky transaction, as it's not backed by the security of a stock exchange. The transaction time is also longer, and there's a lack of liquidity, which means you might find it difficult to sell your shares when you want to. Additionally, the minimum lot size required to purchase is higher, which means you need a larger investment amount. Lastly, there are only a few dealers available for transactions, which can limit your options. In a nutshell, unlisted shares are shares of a company not listed on a stock exchange, traded over the counter, or through specialized brokers. They offer the opportunity to invest in a company at an early stage and potentially earn better returns. However, they also come with risks, including a lack of liquidity and higher investment amounts. So, if you're considering investing in unlisted shares, it's crucial to weigh the potential benefits against the risks. And as always, it's a good idea to seek the advice of a financial advisor. Remember, the investment in unlisted shares can be beneficial when done for a long-term period. So if you're a patient investor looking for potential high returns, unlisted shares could be an interesting avenue to explore. And that's a wrap on unlisted shares. Stay savvy, stay smart, and as always, invest wisely.